What's up, guys? Been a little while. I am back with a video. So here's a trade that I'm in still. I have a partial position on. This is a trade I took yesterday, the last session here. It's an AU short from this area here. Here's our 1 hour chart. So the entry was here on the short. Took some profit. See if I'm going to get a little more here. Stop at break even. All right, so let's start from the beginning on this. This is all just stuff I had marked up here. Okay. Let's do the whole process. Daily chart. Downtrend. Downtrend that's gone sideways for a few days, but obviously we're in a downtrend. There's no question about that. Swing-wise, structure-wise, we've not made any sort of higher highs, higher lows. 4 hour looks like a downtrend to me. Okay, I'm really just going through the whole process here. This is really what I do. I don't look at the colors. I don't look at the... It's just pretty obvious. Does that look like an uptrend or a downtrend or a range? It looks like a downtrend, right? Okay. So that's pretty obvious. Now, the point of that, of course, is before I even get to volume, I'm looking at that stuff kind of going top down because I want to see what the trend is. It doesn't mean I have to go with the trend. It means that that information does matter, of course, in combination with volume. So unless I'm seeing overwhelming demand, lack of supply, and the balance is really changing, then I'm looking to stay with the trend. Even if demand is occasionally showing up to some extent, I'm still looking to go with the trend. So we get to our 1 hour, and just look at our recent high volume points, right? And I do want to point out, let me zoom out again, this weakness here. Recent high volume weakness. When you see that during a downtrend, and again, this is your basic VSA sign of weakness, assuming you know the basics here. When you see this during a downtrend, forget about longs for a while. Just don't even think about it. Look for your ways to get in with the trend, right? Obviously, that was just a very clean, from there, it was nothing but profit if you looked for entry after that. But again, we're just looking at our background, our recent high volume points going into this day. And mainly I'm doing that on the 1 hour chart first. So that stands out. Also, how is this trend looking as far as the balance of supply and demand? Now, something I want to point out, I've probably mentioned this before, I'm seeing this a little more consistently lately, but it's something you'll see fairly consistently. This is Friday, late on a Friday, right? Now, what do you think the majority of the positions are in the market by smart money? Shorts, right? So there's going to be some profit taking to some extent on Fridays. It's been very regular lately that you get. No, we're not talking about climactic. We're not talking about so much demand that now we're looking to go long. But we're seeing that lower prices attracting some demand, which is profit taking out shorts, and it works together. And that's why you're going to consistently see that. You have to take that with a grain of salt going forward. That late Friday stuff, right? And we're just using really simple logic here. They're not pre-positioning long during a downtrend late on a Friday, right? They're more likely taking profit to some extent before the weekend, and we go forward from there. So always take those with a grain of salt. If you have a downtrend, you have a sign of strength late on a Friday, don't think, all right, I'm looking to buy Monday. You really need to confirm that, makes sense, right? So we see that consistently. You can look through your charts and see that sort of action late. I'm giving a lot of detail here, but I think this is good. I've been talking to a lot of people lately, just very busy on Skype and talking to people, and everybody's hungry to learn, and so it made me want to do another video. Okay, so going forward, lots of weakness, downtrend, a bit of profit taking, not changing our bearish environment here in our downtrend. What do we have here yesterday, which I didn't trade on Mondays, which I normally don't, but we're still seeing that behavior of, more selling than buying. We want to stay with this trend, and this is obviously, if you traded Monday, I didn't look at the small time frame as far as entry, but you get the idea. This is right in our fibs. I mean, this is textbook stuff. So I would assume somebody watching this video took this short yesterday, right? Leave a comment if you did. But I didn't look at the 5 minute. I'm not sure if that lines up, but we can look in there. Actually, yeah. That was part of the setup, so we'll get to that. It was actually very good on the 5 minute, which was part of the reason why I was looking to really go short still. So that's all good as a sign of weakness. Again, highest volume on Monday. Okay, so pretty self-explanatory here. We have our signs of weakness more than any sort of demand in a downtrend. Here's our fib zone. Let's try to extend that a bit. We didn't quite reach that on the short. I was thinking we may get there and look for the short, but it's set up a little earlier. That might have been ideal, but setup is a setup. We'll get in there. So there is some demand to some extent, again, showing up here and there, but in a downtrend, this little demand is not going to say we need to go long. No. It means more likely you'll get a retracement, then look for your short, right? And if we go back and look, again, I'm giving a lot of detail here, a lot of good info. What was that, right? That was the sign of strength we just saw in the 1 hour, a fair amount of volume for that time of day. Now, if we go and look at the 5-minute chart, what does it show? It's probably a news release. But it shows a 5-minute spike. Technically a sign of strength, you could say. It's a sign of a 5-minute spike in volume. And besides that, it's all completely just normal stuff, right? There wasn't any extended period of time, large activity. Something like that does not communicate. Simply put, my point here is something like that is not communicating to us that all the short positions in this downtrend have been covered. They're out of their trades, and they just did it in 5 minutes. It's not going to happen like that. But so again, you can see these sort of blips of strength during a downtrend or weakness in an uptrend, and say, okay, it's more likely to retrace and give me an option, an opportunity to short. Those sellers are not going to start fighting against buyers. They're going to let it come up, right? And then they're going to find the point at which they're going to look to sell, and that got the setup going. So just to point out about that, it's a strong support going forward. It doesn't mean go counter trend. It doesn't mean all the short positions are out. But it does mean look for a retracement rather than any sort of aggressive early short in this area, because we know there's more buying for the moment. Right? Okay. So we're reading the charts, we're reading the language, we're understanding where smart money is positioned from, what the majority of them are doing. And of course we want to follow that. So this is the area, okay, just to show again the 1 hour chart. So we're here. I was looking for maybe that, but we were here. Okay, so let's get in there. That was the strength blip we just saw. So this is where we are, looking for the entry on the 5-minute chart. Also, I do this sort of stuff on the 1 hour. Did it quite reach that? Yeah. Okay. So at least we had some technical analysis to agree with the entry. Zones can be one of the, we have support resistance zones. We have fib. That's it. We have the moving averages, pivots, things that can line up for confluence to help the trade. So in this case, okay, we have our little zone. Very helpful on those zones, right? So, as the session is just warming up here, London Open, right? The zone is marked in advance, and the background situation is very good on this pair, which is why I honed in on it, especially looking for this. And then here is a sign of weakness. It's sitting up here and questionable. I think we were waiting for news, actually. But there was volume increases at the higher price, which is really what we want to see if we're in proper little redistribution sort of phase here. But sign of weakness, and then really this as the result, right? Effort versus result. The result of that volume increase being, the strongest, cleanest down move we've seen in a long time, all day. I mean, 5, 10, 15, 20, 25 minutes of just nice, healthy red candles, no high volume, no strength coming in, right? It's just a consensus to start selling, right? From here, we know this is smart money, how they're acting. So, do you want to get into the trend on something like that? Exactly, right? That's what you want. So as far as the entry, okay, not a no demand, not an automatic support. We're waiting. Finally here, and we could say at this point in time, as it starts to bounce, we've found our automatic support, right? This is all taught in my other videos. I'm just running through this. First level of support after weakness. Test for buyers. Look at the low volume test. Good, right? 14 EMA. This pivot is actually different. I don't know if it was a pivot yesterday. Kind of thinking that it was. But anyway, again, that 14 EMA. More and more over the past 6 months, a year or so, I've really gotten into seeing the action of the 14 EMA acting as support resistance and the test. I mean, look at all that support, and then it breaks, and then it becomes a resistance. But a test area. So a test for buyers, as they pause their sell activity and test for buyers. It finally happened here. But anyway, so there's your low volume test. There's your automatic support. So what's my entry according to the method? The push through. So this candle closed at or near the low. And I may have waited a little bit into this candle when I actually entered. My entry price was 4.6, so it was right there. I'm not sure if it was right into this candle, but the idea is really waiting for this to close is proper. So yeah, it was on this one, right there at 4.6. So this is a push through automatic support, right? Closing at or near the low. It's near the low, right? No large pin rejection there. At or near the low without high volume. And look how low that volume is. Low volume on a push through automatic support is good. Because remember the principle, lower prices may attract buyers, even slightly lower prices like this, coming off of this. Lower prices may attract buyers, right? Look at the buyers that came in there. This is why they paused their sell activity at this point, because they saw these slight increase in buyers over the last 20 minutes coming in at a low price. So they paused their sell activity. They let the buyers do what they're going to do. They reveal themselves to be very weak in a low volume test. And then when we push through that area, we have the entry. Now, and we don't want to see a lot of volume here again, because that's where there was some buy activity before. So if you're able to get through this area in such a clean way, right, without much volume, what does that tell you about these buyers? They're not there anymore, right? Makes sense? So look at the size of that candle and the amount of volume. It's almost rare to see a unusually large candle. This is larger than like the past, 50 candles or something, right? But look at the volume. And that's in an area that tests for buyers, as I say with the automatic support. It's a test for buyers. And to see that sort of reaction is great. Okay, there's such little buying in the market, right? Okay, at least at that point in time, I had to sit through this little move, and then it played out because some buying came in here, right? But we can follow the storyline. Now, so that was my entry there. My stop was just above the high here, somewhere up there. But I usually allow, again, as I say, for any sort of double top ranging conditions, fake break, so I don't get my stop right there. I give it a little room for all this stuff to happen. So that's the entry there. Now, just notice what happened here. Following the storyline, following the activity, seeing that this information is all factual, here's a sign of strength. Now, we're just following the fluctuations and the increases, decreases in buying by professionals that show up on a chart like this. As we go along. Our background is bearish. Again, a 5-minute slight increase is not going to say, whoa, here come the buyers. It's time to buy. It's time to get out of the trade. That's not excessively high volume. It's not ideal to see if you're short, but let's just follow here. So a little buyers come in, closes well off the low on higher than the previous 12 candles or whatever, right? So we have a sign of strength just there. So this was not surprising, right? Okay, the trade is losing some probability, but the background tends to play out. And just as these buyers disappeared, these buyers will probably disappear. Unless you see a real volume spike and a real issue, it's not ideal, but it's not a deal breaker as far as you got to get out of the trade. If it was a large spike, that's a different story. Or continuous buying as the trade is not able to move along and you keep seeing signs of strength, that's definitely something where I'd want to get rid of my risk at least, move my stop to break even. So just going forward now, I had to sit through this. This started out to be a really low volume test for buyers, yet the buyers were sort of showing up. But you see the drop in volume on the up move and the up move compared to what was just happening before. This technically comes in as a sign of weakness. It's a fib, slight overshoot of the fib. But trades don't always go in a straight line. The point is the setup is good. I said this yesterday to the group, and I say it a lot. I'll say it again. I'd rather be in a good situation where the chart is telling, this is how much I trust the chart. I know how to read the chart. I'd rather be in a situation with a little drawdown. This is 12-pip drawdown or something. And the chart is saying the trade is good. Then find myself in a bit of profit, but signs of strength are coming in. There's some issue the chart is saying. That's how much I really do trust the chart. So a little drawdown while the setup is still intact, you live with it. Whatever, it's fine. It doesn't always move in a straight line. But you're positioned with smart money, and they'll eventually do what they do. So sat through that little move, and down it goes, down it goes. The main target on the trade was the basically you have, support here. Where did that just go? However you draw it, you can draw it there. That would be probably most proper. But here's the previous, low and the support. So if you're selling here during a downtrend, support is always a good first option for taking some profit. That's about 35 pips from that entry to the support. So that's reasonable there. So I took off profit a couple of times in here. I have about 60% of my original position on. And I'm looking for, remember, I'm with the trend. That's just an initial intraday target to get something in the bank and get rid of my risk. If it runs up, I'll get out, right? We don't need to mess around. But most likely, unless some buyers show up or there's some issue, I'll see how the chart is behaving. Next stop is here. It's not rocket science, right? We're in a downtrend and we're seeing more selling than buying. What do you think's the next stop? Probably there. If not, another leg down, depending on how it behaves there, right? So as far as managing the trade, realistically, based on what the chart is communicating. All right, that's the setup. That's the trade. So I'll try to make more videos again. I don't know. I just kind of go through different phases. I've been actually very busy with, things outside of trading. It's not a very big part of my life at all. Doing music production, things like that. All right, guys. Also, I want to let you know, instead of the private one-on-one mentoring, I'm now doing a class. It's very structured, and it's going to be very similar to what is available in the video course. I'll go to the website just so you see. So those of you who have bought the course, you're not going to, there's nothing new. When I say I cover the whole method, I cover the whole method. But the difference with the live classes as opposed to the video course is that it's interactive. So it's whatever sort of kind of thing you're comfortable with. If you have questions, if you want to do homework and give it to me and I'll tell you, look at your analysis and tell you what you're doing right, what you're doing wrong. It's small classes, limited to 5 people. So this is really to make sure everybody still gets personal attention and all that. So if you want to do that route, as you can see here, there's the classes. And that's starting on this Monday coming up. So all you have to do is fill out the form, but you have information here you can read. It's every Monday at London Open for 5 weeks. If you miss a class, you can get a recording. Anyway, if you have any questions, you can fill out that form and read some of the info there. But I'm looking forward to that because, it's going to be able to lay out the method interactively with people, over 5. The classes are an hour and a half each. So there's a lot of time. And we're covering everything from the very beginning to the very end, everything. So again, it's just like the videos. I've added more to the video course. If you bought the video course and you didn't get the 3 additional webinars that I've added, just let me know. I'll send it to you. No charge. But now I added them, so it's over 9 hours. I think it's like 12 hours now, the video course. So again, everything is covered there. And you can always attend the live session if you get the course. So that's really just an update on the fact that the private mentoring is gone and we're doing classes now. I also like the structure and the schedule of doing every week and all that. So what else? I will mention I'm very excited about something that I'm going to keep top secret for now, but I'll give you a little hint. The volume issue that we're having, I subscribe to eSignal. I'm paying like $150 a month for eSignal because I want a good volume feed, and it's a composite feed of like 300 brokers and all that. I know in the past I've talked about MetaQuote's feed. I've talked about IBFX until they were bought up and I couldn't use them anymore. And it was always sort of this, well, IBFX was very stable. But now there's sort of this ongoing issue of what do we do about volume, and I'm telling people, ideally if you're not going to pay for eSignal, which for a lot of people doesn't make sense when they're first learning to go pay for that every month. It's not that different from what you're seeing with your broker's volume. And ideally, if you have 2 or 3 MT4s, open on your computer or whatever platform, and you're getting your volume feed from a few different brokers, that's really the best thing you could do. eSignal is like 300, sources. So we're talking about trying to see the market as a whole, and get the activity read on the market as a whole as much as we can, since it's not a centralized, price feed. So there is something in the works that I might be offering soon that's going to really solve that issue. Done. You'll have some very good information on your MT4 chart. Okay, I'll leave it like that. So I'm very excited about that. All right, guys. So that's it. Still doing the live sessions. You can always join me there. And again, the best thing to do, I recommend to everybody, is watch all the YouTube videos. There's a lot of them, and they're free. So enjoy. You found the Holy Grail. Congratulations. All right, what are you going to do about it? Go watch the videos. All right, guys. See ya.